the S&P 500 and Nasdaq are sinking this morning as big tech names like Nvidia, usually a leader, fall. Meanwhile, smaller stocks are seeing a rebound, up over 10% in the last week. Joining me now is Aadil Zaman, Wall Street Alliance Group partner. Aadil, thank you so much for coming on the show today. It looks like quite a different story for markets with the big pullback that we're seeing in mega tech stocks. We're about to enter a volatile time with the election upcoming. So how do you recommend investors should be positioning their portfolios?
I think, investors need to be cautious here because the market has gone up so much in such a short period of time. So a correction, in our opinion, is definitely on the cards. And we feel that at this point in time, investors should have some firepower to be able to take advantage of a pullback. We've been calling this for a long time. People need to book some profits in the big tech and spread the love into other areas of the market that could potentially benefit from rate cuts.
So you think a correction is coming. One, when do you think that correction could be seen in the market, and how can investors protect themselves now ahead of that correction?
Well, I think that it's very difficult to time the correction, right? But there are a few things that investors could do. Like if we're just talking about overall financial planning, have some firepower. In case there's a pullback, put it to work. So for example, if you have a moderate investment objective, you go 70% in equities, 30% in fixed income, market falls, you go 80-20. You increase your equity exposure. This way, you could potentially get better risk-adjusted returns.
There's been a lot of talk about if and when the Fed will cut interest rates. It seems like we are going to get an interest rate cut at some point this year. Do you think if we do, that could potentially delay any type of correction, or do you think the stock market is just so hot right now that a correction is unavoidable at this point?
I think the stock market has a lot going for it, right? Unemployment is low, inflation is low, economy is doing well. Fed, whether now or whether later, they're going to cut rates. So we are firm believers that long-term the market is going to go higher. It's very difficult to precisely time exactly when that pullback is going to happen, but as long as investors have firepower, they could use that as an opportunity. And also, we feel that with the rate cuts that you mentioned, the breadth in the market is going to improve. So investors should start looking at allocating into other areas of the market, not just focused on 4 or 5 companies in a concentrated way.
So let's talk about those other areas of the market. As we see this broadening out, we know we have this rally in small caps. Are there other areas that you think are undervalued at this point?
For sure. The bank earnings came out. We liked what we saw, right, generally. And although there's going to be net interest income compression, we feel that because of rate cuts, investment banking activity will pick up, asset management fee goes up, trading fee goes up. So we like that space. We also feel, we've been talking about this for a long time, but we feel that because of artificial intelligence, it consumes a huge amount of electricity. And because of that, utilities could do well, potentially, which was the worst performing sector last year, but this year has started to pick up. So these are the type of areas that we would gravitate towards to create more diversification in the event of a correction. Diversification would protect your portfolio.